There's this huge kind of hidden financial world out there. It's operating right now, and the sums involved are just staggering, really hard to grasp. And this isn't like a movie plot. It's the reality of financial crime. So today, we're going to cut through the complexity, give you a really direct, no-nonsense look at things like money laundering and other major financial scams. Think of this as your essential guide, really, to a side of finance you definitely need to understand.
Exactly. And for this deep dive, we've gathered information from, well, all over. We're looking at recent news reports on big cases, detailed analyses of payment fraud trends, academic research into financial crime and tech, and importantly, updates from regulatory bodies.
Yeah, our mission today is pretty straightforward. Get you up to speed on financial crimes, how they actually work, how common are they, what's being done to fight them, and the huge role technology plays in all this. We really want to demystify some of these complex terms and just connect the dots for you, especially if you're, say, a young or mid-level professional trying to navigate the financial world. By the end, you should have a much clearer picture. Okay, so let's kick things off. What exactly is money laundering?
Right. So money laundering, based on our sources, is essentially the act of making illegally obtained money. Well, making it look legitimate, like it came from a clean source. A classic example that often comes up is taking dirty cash, maybe from drug trafficking, depositing it in a casino. You gamble a bit, then withdraw the funds as winnings. Now it looks clean or cleaner anyway. It's all about hiding where it really came from.
Right, so it's not just hiding it, it's giving it a fake backstory, and that links it to some pretty serious stuff, yeah.
Oh, absolutely. Money laundering is, well, it's fundamental to enabling other major crimes. Think about terrorist financing, organized crime networks. They need to launder their money to fund their operations, to make it usable.
Okay, so if someone has this dirty money and they want to clean it, what are the steps? Is there a process?
Yeah, generally it's seen as having 3 stages. First is placement. That's getting the illicit cash into the financial system somehow. The initial deposit, you could say.
Okay, placement, step 1.
Step 2 is layering. This is where it gets complicated. They perform numerous transactions. And our sources point out things like wire transfers make this really fast and easy, specifically to obscure the original source. It's about creating this confusing trail, making it hard to follow the money back to the crime.
Like shuffling cards, but with money transfers.
Kind of, yeah. And the final stage is integration. This is where the laundered money, now appearing legitimate, is put back into the economy. Maybe through investments, buying property, luxury goods, whatever. It's mixed with legitimate funds, like buying a house with that clean cash.
Got it. Placement, layering, integration. And we hear the term shell companies a lot with this. What role do they play?
Shell companies. Right. These are basically businesses that exist only on paper.
Yeah.
No real operations, no significant assets, maybe no employees. They're set up purely to obscure ownership and control of finances.
So anonymity.
Exactly. That lack of transparency makes them perfect tools for hiding illegal cash. And importantly, getting around AML anti-money laundering requirements. They act as a sort of legal facade.
Right, a smoke screen. Okay, that makes sense. So we understand the what, but how do these criminals actually pull off these financial crimes? What methods are they using right now?
Well, the 2024 Payment Threats and Fraud Trends report we looked at gives some really good insights here. One very common method is invoice fraud. You might also hear it called IBAN fraud, that's international bank account number fraud. Basically, criminals intercept legitimate invoices, maybe by hacking email accounts, and they just change the bank account details to their own. So the payment meant for a genuine supplier goes straight to the fraudster.
Wow, okay. That sounds almost simple, but I guess very effective if it's happening a lot. What else?
They're also increasingly targeting systems directly. Payment initiation and authentication attacks. This often involves malware, malicious software infecting computers or phones. The report mentions things like keyloggers that secretly record everything you type, including passwords, also RIDs, remote access Trojans, which let attackers control your device from afar, and even tools that scrape sensitive data like bank logins or card numbers right out of the device's memory.
Like digital pickpocketing.
Yeah. And Emotet gets a specific mention as a really nasty, persistent type of banking malware.
So sometimes it's not about tricking the person, it's about compromising the tech they use.
Precisely. But tricking the person is still huge. They call these authorized card transaction scams. Here, the fraudster convinces you, the victim, to make the fraudulent payment yourself.
How do they do that?
All lots of ways. Fake investment schemes, promising huge returns. Romance scams where they build an emotional connection then ask for money. Phishing emails are classic. They lead you to fake websites that look real, trying to steal your login details or get you to subscribe to something fake. We also see fake apartment rental listings or even spear phishing, which is more targeted. They research you first to make the scam seem incredibly plausible, maybe pretending to be your boss or a known contact.
It's unsettling how sophisticated these social engineering tricks can be. What about newer tech, cryptocurrencies, or CVCs as the report calls them? How are they used?
Crypto is interesting. It presents unique challenges. While, yes, the transactions are public on the blockchain, the identity behind a crypto wallet address often isn't known. It offers a degree of anonymity.
Right.
And then you have things called Bitcoin mixers or tumblers. You pay a fee, send your crypto through this service, and it mixes it with lots of other transactions, making it incredibly difficult to trace the original source or the final destination. It obfuscates the flow.
So the transparency of the blockchain isn't necessarily a silver bullet against crime.
Not when tools exist specifically to muddy the waters, no. The report also flags the ongoing use of money mules.
Money mules.
Yeah, these are people often recruited without even knowing they're involved in crime, who let their bank accounts be used to receive and transfer illicit funds. They act as intermediaries. And of course, simple, anonymous, or non-traceable money transfers are still part of the picture.
And with everyone using their phones for payments now, mobile wallets must be a target too.
Absolutely. Mobile wallets and what's called the CDCVM space, that's cardholder device verification method, like using your fingerprint or Face ID, are definitely targets. Attackers try to steal the stored credentials, exploit software vulnerabilities using malware, maybe gain higher privileges on the phone through rooting or jailbreaking.
More malware examples.
Yeah, the report mentions things like NFC relay attacks. That's where they could potentially capture your contactless payment signal from your phone and relay it fraudulently to a payment terminal nearby. And also interface attacks. An example given is the Vulture RAT, which can put fake login screens over your real banking app to trick you into giving up your details.
It really feels like every tech advance creates a new potential vulnerability, even crowdfunding.
Unfortunately, yes. We're seeing crowdfunding scams. Someone sets up a campaign, raises money for a supposed project or cause, and then just disappears with the funds without delivering anything.
Okay, this paints a pretty concerning picture of the methods. Let's talk about scale. Just how big is this problem? Can we quantify the volume of financial crime?
It's hard to get exact global figures, but sources give us some stark examples. Take the Karachi case from February 2023. 16 officials from the National Bank of Pakistan and some petroleum companies were arrested. The allegation: involvement in a massive scam worth Rs $54 billion. That's huge.
Right.
It was described as potentially the biggest financial scam in one report, involving fraud, breach of trust, money laundering.
54 billion rupees. That's staggering. Any other examples that show the scale?
Definitely. Look at Bitslotto. It was a cryptocurrency exchange with strong links to Russia. Between 2019 and 2021, it reportedly received something like $206 million in crypto from darknet markets.
Wow.
Another $224 million from known scams, and $9 million directly from ransomware attackers. And get this, almost half, 48% of all the known transactions on Bitslotto involved Russian illicit finance or other high-risk sources.
That really highlights the international nature of this, doesn't it? And how crypto facilitates it.
It certainly can. We also see evidence of physical cash movement. In Pakistan, between 2012 and 2018, authorities seized over 584 million rupees, that's about 4.3 million US dollars in currency, being smuggled across borders. Shows cash is still king sometimes.
And it's not just emerging economies, right? What about places like the UK?
No, it's global. The UK's own AML-CFT supervision data, that's anti-money laundering and counter-terrorist financing, shows they're taking significant action. In the 2022-23 period alone, they issued fines totaling over $196 million against non-compliant firms. That level of fines suggests the scale of the challenge even in a major financial center.
Over £196 million in fines. That's substantial. It tells you non-compliance is a serious issue.
It absolutely is. And just to give another perspective, looking at STR's suspicious transaction reports in Pakistan again, their financial monitoring unit shared 198 STRs specifically linked to terrorism financing. Plus, financial institutions filed over 600 more STRs when they actually refused services to individuals or groups on terrorist watch lists. That volume of reporting indicates a lot of suspicious activity is being flagged.
So while we don't have a clear league table of worst offenders, the sources do seem to point towards certain areas facing significant challenges or being major hubs.
That's a fair assessment. Pakistan is definitely highlighted as facing considerable money laundering and terrorist financing risks, partly due to the presence of various terrorist groups and their use of both the formal banking system and informal methods like hawala or hundi for moving money.
And Russia came up prominently with Bitslotto.
Yes, Russia appears as a major nexus, particularly for ransomware proceeds and other illicit finance flows, with platforms like Bitslotto acting as key facilitators. And it's interesting, Bitslotto was registered in Hong Kong, but its operations and most of the suspect transactions were heavily tied to Russia.
Okay, so given this scale and these methods, how are governments and regulatory bodies trying to get a handle on this? What's being done?
Well, it's a continuous battle, an arms race almost. In the UK, for instance, they're actively reforming their AML-CFT supervision. The focus seems to be on making supervision more effective, making sure businesses really understand their obligations, and, crucially, taking stronger action against firms that don't comply. This is part of bigger strategies like their Economic Crime Plan 2 and new laws like the Economic Crime and Corporate Transparency Act.
So, tougher oversight and more consequences for not following the rules.
That's the idea. The UK Treasury also has a supervision framework that aligns with global standards set by the FATF, the Financial Action Task Force. This framework emphasizes things like proper risk assessment by firms using enforcement as a deterrent and better intelligence sharing between authorities and the private sector.
What about making the payment systems themselves safer? Any initiatives there?
Yes, definitely. The EPC, the European Payments Council, manages the SEPA Request to Pay scheme, or SRTP. They're bringing in a verification of payee scheme. This is designed specifically to combat that invoice fraud we talked about. It lets the payer checks that the name on the account matches the account number before they send the money.
Ah, that seems like a very practical step against a specific scam. Good. Now, going back to Pakistan, given the risks mentioned, what's the approach there?
Pakistan has been making efforts to strengthen its AML-CFT regime. They did a national risk assessment back in 2017, though our sources suggest it wasn't as comprehensive as it could have been and maybe didn't involve the private sector enough. There seems to be a bit of a divide. Most big banks and larger exchange companies seem to understand their AML obligations fairly well. But other financial institutions, and especially DNFBPs, designated non-financial businesses and professions, think real estate agents, lawyers, accountants, their understanding and implementation of the rules seem much more limited.
So, inconsistency across the board is a challenge there.
It appears so. The SECP, Pakistan Securities and Exchange Commission, regulates the securities market for AML-CFT. But again, some weaknesses were noted in their risk-based approach and enforcement. Another challenge highlighted is effective information sharing between the National Financial Monitoring Unit and the Provincial Counterterrorism Departments, CTDs, specifically for tracking terrorist financing.
Sounds like coordination and consistent enforcement are key areas needing work. But you mentioned technology earlier. Are they adopting tech solutions in Pakistan too?
Yes, on a positive note, the SBP, the State Bank of Pakistan, is actively encouraging fintech innovation. They're pushing projects like RAST, which is aimed at creating an instant digital payment system. Modernizing infrastructure can help. And elsewhere, we see tech being used proactively. Estonia has an anti-money laundering platform called SALVE, or AML Bridge, that's specifically used to fight APP fraud, authorized push payment fraud.
Right, where you're tricked into sending the money yourself. That platform helps banks share information quickly about scams in progress.
Exactly. It shows technology being deployed as a defensive tool.
Which really brings us back to that point about technology being a double-edged sword.
Absolutely, and we can dive more into that. But first, you asked about well-known organizations fined or banned. Our sources don't give a long list of household names fined specifically for general financial crime, but that Karachi case is telling. You have officials from a major state-owned bank, the National Bank of Pakistan, and big petroleum companies like Haskell and Byco implicated. While they were arrested, not yet convicted or fined in the reports we saw, the potential for serious penalties is clearly there.
And Bitslotto, too. That seems like a prime candidate for regulatory action.
Indeed. FinCEN in the U.S., the Financial Crimes Enforcement Network, specifically designated Bitslotto as a primary money laundering concern, linked to Russian illicit finance and ransomware. That kind of designation is a major red flag and often precedes stricter actions, like blocking access to the U.S. financial system.
Okay. Before we really dig into technology's impact, maybe a quick recap of some key terms would be helpful. We've thrown a lot out there.
Good idea. Let's run through them quickly. Money laundering, making dirty money look clean. Placement, getting the dirty money into the system. Layering, complex transactions to hide the source. Integration, putting the cleaned money back into the economy. Shell company, a front company existing only on paper to hide ownership. AML-CFT, anti-money laundering counter-terrorist, financing the rules and efforts to stop these. KYC, Know Your Customer Banks verifying who you are. FinCEN, the U.S. Financial Crimes Enforcement Network. CVC, convertible virtual currency like Bitcoin. VASPS, virtual asset service providers think crypto exchanges. Darknet markets, illegal online marketplaces, ransomware, malware that locks your files and demands payment. IBAN, International Bank Account Number, SRTP. SEPA, request to pay a European payment messaging system. APP fraud, authorized push payment fraud tricking you into sending money. STR, suspicious transaction report filed by banks about potential issues. CTR, currency transaction report for large cash transactions. DNFBPs, designated non-financial businesses and professions, lawyers, accountants, etc., and FATF, the Financial Action Task Force, the international body setting AML-CFT standards.
Perfect. That's a great glossary rundown. Okay, now let's focus on technology. It feels central to this whole issue, both enabling crime and fighting it.
You absolutely nailed it. Technology has, without a doubt, made financial crime easier in many ways. Think about the speed of online banking and wire transfers it allows for incredibly fast layering across borders. Cryptocurrencies, as we discussed, offer that layer of pseudonymity that criminals find attractive, even if the ledger is public. Mobile payments, instant transfers, they create new vectors for attack, new ways to move money quickly.
And the cyber attacks themselves are getting more sophisticated.
Definitely. Malware is constantly evolving. We hear about APTs, advanced persistent threats, sophisticated, often state-sponsored hacking groups targeting financial institutions. Plus, things like AI-powered chatbots are now reportedly being used to make social engineering scams more convincing, more personalized.
It really is an arms race. But on the flip side, technology is crucial for defense too. RegTech is the buzzword, right?
Exactly. RegTech, regulatory technology, is all about using tech to help meet regulatory requirements and fight financial crime more effectively. Think big data, cloud computing, data lakes. These allow institutions to gather and analyze massive amounts of transaction data, customer information, even news and social media, looking for red flags for KYC and AML.
Sifting through mountains of data for suspicious patterns.
Precisely. And AI and machine learning, ML, are huge here. They're building fraud detection models that can spot subtle anomalies, predict risky transactions, and even personalize security measures for individual users based on their typical behavior, things a human analyst might easily miss.
What about blockchain? We said it's used for crime, but can it be part of the fix?
It's being explored. Blockchain's core features immutability, meaning records are hard to change, and cryptographic security have potential benefits. People talk about using it for more secure identity verification or tracking assets more transparently. Smart contracts, self-executing contracts on the blockchain, could automate certain compliance checks. But it's complex. Research suggests blockchain isn't a magic bullet for all financial crime. Its effectiveness really depends on the specific application and how it's implemented.
So it's part of a bigger tech toolkit, not the whole solution?
Exactly. You see the Estonian AML platform using shared ledger tech effectively for APP fraud. Fintech companies are generally built on advanced tech for fraud detection and AML. And the regulators themselves are trying to adapt, making sure their rules can cope with constant technological change, both the good and the bad.
This has been incredibly insightful. It really paints a picture of financial crime as this, well, vast, complex, and constantly shifting challenge.
It really is.
Yeah.
I think the key takeaways are financial crime, especially money laundering, is multifaceted and it's everywhere. Technology is a powerful force, but definitely a double-edged sword, enabling crime, but also offering vital tools to fight it. And while governments and regulators are actively working on this, updating rules, improving oversight, adopting tech, there are still huge challenges. Effective implementation, cross-border cooperation, these remain critical hurdles.
It absolutely underlines why understanding this stuff is so important, especially for professionals working anywhere near the financial sector today. It touches everything.
Couldn't agree more. And maybe a final thought to leave you with. Given how fast technology is evolving, how can we individuals, businesses, governments actually stay ahead of criminals who are also innovating? And linked to that, how vital is international cooperation in tackling a problem that clearly doesn't respect borders?
That's a great question to ponder. For anyone listening who wants to dig deeper, you could check out the FATF recommendations online, look into some of the RegTech companies and solutions out there, or find case studies of specific AML successes. It's definitely a field where learning is continuous. Thanks for joining us on this deep dive today.